Whoa, Bitcoin Bulletin is back, and we've got breaking news that's going to blow your minds. Get ready for a rapid-fire rundown that'll leave you on the edge of your seat. First up, Yala is shaking things up, letting you mint stablecoins while keeping your Bitcoin safe. Then, we dive deep into Bitcoin's wild ride, staring down critical price points that could change everything. And hold onto your hats, because MicroStrategy's S&P 500 SNUB is raising serious questions about corporate crypto adoption, and Solana's facing its own unique battle with the SEC. You don't want to miss this. Hit that like, subscribe, and ring that notification bell so you never miss an update. Yala unleashes Bitcoin holders' stablecoin power. Yala has just dropped a game-changing protocol that lets you mint stablecoins backed by USDC, all while keeping your precious Bitcoin securely in your own custody. This isn't just about creating digital cash. It's about unlocking massive cross-chain liquidity and opening doors to real-world asset integration like never before. Imagine minting stablecoins that work seamlessly across multiple blockchains directly from your Bitcoin holdings. Yala's innovation means you can now bridge your Bitcoin to a universe of DeFi opportunities, connect to tokenized bonds, commodities, and so much more, without ever giving up control of your original assets. This protocol is a massive leap forward in making Bitcoin more functional and integrated into the broader financial ecosystem, offering a powerful new way for holders to leverage their wealth. The crypto community is buzzing, with analysts calling this a pivotal moment for Bitcoin utility, potentially setting a new standard for how digital assets can be used to unlock liquidity and access diverse financial instruments. Early adopters are already exploring the possibilities, highlighting the protocol's user-friendly interface and the immediate benefits of enhanced capital efficiency. But before we dive deeper into this financial revolution, can you afford to miss the critical price levels Bitcoin is battling right now? Stay tuned. Bitcoin at the $114,000 crossroads, bullish breakout or bearish breakdown. Bitcoin is teetering on the edge, caught in a critical $110,000 to $116,000 range that could dictate its next major price move. On-chain data from Glassnode reveals that holding above $114,000 is key to unlocking bullish momentum, but a fall below $108,000 could trigger significant market stress. Since its mid-August all-time high, Bitcoin has navigated a complex price landscape, with current metrics showing healthy dip buying activity around the $108,000 mark. However, the crucial question remains, is this consolidation, or are we heading for a contraction? We're seeing short-term holders booking substantial profits while recent buyers are realizing losses, a pattern that mirrors past stress phases. For a sustained rally, new demand must effectively absorb these opposing flows. The demand for spot Bitcoin ETFs has noticeably weakened, with daily net flows significantly lower than their peak. This fading ETF interest means derivatives are now playing a more critical role in supporting the market structure. While futures data suggests seller exhaustion and a balanced market, the overall leverage remains contained. This delicate balance, propped up by derivatives while ETF inflows and long-term holder conviction show signs of fatigue, leaves Bitcoin vulnerable at this key inflection point. This price action is critical, but what happens when a company deeply tied to Bitcoin gets snubbed by a major stock index? We break down the MicroStrategy situation next. MicroStrategy's S&P 500 rejection, Bitcoin's corporate finance hurdles revealed. MicroStrategy, a titan in Bitcoin adoption, faced a major setback when it was rejected from the S&P 500, despite meeting all technical requirements. This decision highlights a systemic bias against companies heavily invested in Bitcoin, raising significant questions about the future of crypto in corporate finance. The volatility of Bitcoin remains a primary concern for institutional investors, making it a challenging asset to position as stable and reliable. Beyond price swings, behavioral biases like the lottery effect can complicate the narrative around Bitcoin's intrinsic value. Compounding these issues is the persistent regulatory uncertainty globally, making it difficult for businesses to formulate long-term strategies. MicroStrategy's rejection, resulting in a 3% stock drop, sends a clear signal. Firms deeply entwined with Bitcoin may struggle to access capital markets and scale their operations within the traditional financial system. This event underscores the need for robust regulatory compliance. Companies like those in the UAE are already navigating evolving frameworks, emphasizing anti-money laundering, AML, and counterterrorism financing, CFT standards. For Bitcoin-heavy firms, adopting strong compliance and transparent practices is not just recommended, it's essential for building credibility with regulators and traditional finance players. Strategies like converting Bitcoin to stablecoins, using convertible stock offerings, and maintaining open communication about crypto activities are crucial for managing volatility and building trust. While corporate finance grapples with Bitcoin, another major cryptocurrency is facing its own intense regulatory spotlight. We're talking about Solana. Stick around. Solana's regulatory gauntlet: security status, decentralization woes, and ETF hopes. Solana is confronting a unique and complex set of regulatory challenges that set it apart from Bitcoin and Ethereum. The SEC's classification of Solana's sole token as a security creates significant uncertainty, hindering the approval of Solana-centric financial products like ETFs and imposing extra compliance burdens. Unlike Bitcoin, which is broadly recognized as a commodity, and Ethereum, which has gained more regulatory clarity, Solana remains in a precarious position. Critics also question the decentralization of Solana's network, which utilizes a mix of proof-of-stake and proof-of-history, arguing it doesn't match the robustness of Bitcoin or Ethereum. This perceived centralization is a red flag for regulators. Furthermore, regulatory delays, particularly concerning ETF decisions, have pushed potential approvals to October 2025, creating market instability. Solana's active political lobbying efforts to classify SOL as a commodity also add another layer of complexity not as pronounced for its counterparts. Despite these hurdles, institutional treasury support is a stabilizing force for Solana, enhancing liquidity and reducing sell pressure. In 2025 alone, corporations invested nearly $1 billion in SOL, with institutional staking making up a significant portion of the circulating supply. This capital influx creates a flywheel effect, locking up tokens and boosting price stability. Fintech startups are also leveraging Solana's low transaction fees and high throughput for efficient crypto payroll solutions, integrating with DeFi protocols and stablecoin platforms. Rigorous regulatory compliance, including KYC AML procedures, is paramount for these startups. And that's a wrap on today's top stories. But don't go anywhere yet. We've got a lightning round recap coming up next. And that's a wrap on today's Bitcoin Bulletin. In case you missed it, Yala is revolutionizing Bitcoin utility by enabling stablecoin minting. Bitcoin is facing a critical price juncture at $114,000. MicroStrategy's S&P 500 rejection highlights corporate crypto challenges, and Solana is navigating a complex regulatory landscape. If you found this information valuable, smash that like button, subscribe to Bitcoin Bulletin for more critical updates, and ring the notification bell so you're always the first to know. Don't forget to follow us on all social media platforms for real-time insights. We'll see you in the next one.